In 1984, scientists in Switzerland gathered in a quest to finally determine what is the worst kind of tax in the world, the so-called tax from hell. The answer? Unrealized gains tax. On a serious note, I hate this tax, and I'll show you why. Kamala Harris proposed a limited version of this tax, but I will start with the general case and then tie it back to her campaign proposal. Normally, you pay capital gains tax only once you sell the assets, such as stocks or a house, and actually make a profit. The basic idea of unrealized gains tax is that you don't pay the tax only after selling, but every year you pay taxes on the appreciation of the assets, even if you still hold them. So for example, if your house is worth $500,000 on January 1st and by December 31st it goes up to $600,000, your unrealized gain will be $100,000 and you will pay taxes on that. If the tax rate is 20%, you would pay $20,000. You may start to see the main problem with the tax. It extremely punishes those whose wealth is much larger than their income, which is typical for middle-aged and older people, especially in the middle class. A married couple earning the median income of barely $80,000 a year may easily save up to a net worth of over $500,000 by their 50s. If in a given year both the stock market and the house prices appreciate sharply, the couple may have to pay over $20,000. That's almost 4 months of their net income just for this one tax, even though they made no actual profit because they didn't sell anything. The second group that would be strongly affected are business owners, whose net worth is mostly in the form of businesses they own. If they reinvest most of their money back into the business, which is desirable, they may have very low income while having rapid growth in the value of the business. In such case, the unrealized gains tax could force them to sell part of their ownership just to be able to pay the tax. I cannot imagine anything more anti-business than this. Take the extreme example of Elon Musk. At the beginning of 2020, his net worth was less than 30 billions. By the end of that year, it increased by some 150 billions, mostly due to the skyrocketing Tesla stock. If the unrealized gains tax was 20%, he would owe $30 billion just on this single tax.
Go yourself.
But he did not earn tens of billions in cash. It was all tied up to his stake in companies. So he would be forced to sell quite a big chunk of his ownership just to pay this one tax. You may not care what happens to the richest people in the world, which is somewhat ignorant given that they provide a lot of employment for others, but this could also apply to small business owners, just in a smaller scale. The second problem follows directly from this. The tax slows down the speed of wealth accumulation. If the people owe a large tax every year, they either have to sell a part of their portfolio to get cash for the tax, or they pay with money they could otherwise save. This chart shows you the growth of a $100 investment in S&P 500 index made in 2000 under both tax regimes. The one-time capital gains tax upon sale of the assets already proves to be superior. However, even here it is assumed that the unrealized gains tax has two positive features, without which it would be even worse. Those features are by no means guaranteed. The first one is that in case of unrealized losses, the government should pay you back some money. This is important because no investment is going up all the time. For example, the S&P 500 index ended the year in negative territory quite often. In case of capital gains tax upon actual sale, the final profit automatically combines all previous profits and losses. As you can see, disregarding unrealized losses would slash the return on investment significantly. The second feature that would be ideal is no double taxation. Any reasonable tax code should not make people pay capital gains tax on the gains that were already taxed by the unrealized gains tax. Double taxation is absolutely abhorrent and a financial market killer. Comment below whether you think this tax is the right way to balance government finances. Another issue is the cyclicality of the tax. Asset values typically rise sharply during economic booms and stagnate or even fall during recessions. So the tax doesn't bring much money when most need it. During the economic booms, when it brings most money, it can be even dangerous. The additional tax income may spur additional government spending that will not be cancelled during recessions when the unrealized tax money will dry up. If the law included the possibility to pay less taxes in case of unrealized losses, which would be fair, it would further exacerbate the cyclicality issue. Last but not least, introducing a new tax brings about additional complexity into the tax code. Meaning, you would need to pay more IRS agents to handle the bureaucracy and enforcement on one side. On the other side, the taxpayers would need to spend more money for tax advisors or invest more time and energy themselves. Harris's proposal was aimed only at the super rich, those with wealth exceeding $100 million. That is such a high ceiling that most Americans supposedly should not care at all. But it is still a bad idea. Why? Well, first, if it targets a tiny subset of the population, the tax will not bring any reasonable amount of money, especially if you assume a small increase in tax optimization, evasion, and capital flight, and the additional bureaucratic and enforcement expenses. The little money left over would be very cyclical, coming when least needed. Also, if the tax included a tax return in case of unrealized losses, which again would be fair, then the government would give money to the rich during recessions. That would be both an economic and public relations disaster. It is not clear how would the losses be treated, but ignoring them would be unfair. More importantly, given that the tax would not replace the traditional long-term capital gains tax but would exist in parallel, suggests that double taxation would be unavoidable. That is truly awful. Unrealized gains tax is a bad idea by itself, but double taxation and disregard for unrealized losses would make it truly a tax from hell. Regular Americans should care, because such treatment of the rich may seriously hurt them indirectly. Moreover, once such tax is normalized, there is not much stopping future leftist majorities from decreasing the wealth ceiling and apply it to much broader population. Now, I think there is very little chance that this tax would actually be implemented, even if Harris became president. Still, I think it is worth knowing this information if anyone in any country brings up this stupid idea. I'll see you again in a new world.